Good morning, students. So, in last classes, we have completed all theoretical aspects. So, how the fund flow statement is prepared, we have seen theoretically, and now it's time to study this fund flow statement practically. So, here we will select some important problems, and we will see how the problems are solved and how these statements are prepared practically. So here first we will take a simple problems just about for 5 marks, then also we will select 15 marks, and these are the some exercise problems. And here we will take first one simple problem: calculate the funds from operation from the following information given below as on 31/3/2018. And here in this problem it is asked to find out the funds from operation, and this is third step in preparation of fund flow statement. So here informations are given below as on 31/3/2018. Net profit for the year ended 31/3/2018 15 lakh rupees it is given. Profit on sale of building 75,000 and goodwill return of 40,000 for the year. Loss on sale of machinery rupees 10,000 during the year. Transfer to general reserve is 3 lakh. Provided rupees 1,50,000 depreciation on machinery. So here this is the given information and it is a problem. So now we have to solve it. So first of all we have to calculate by considering this information. We have to prepare the statement to find out funds from operation. So we know already how the funds from operation is calculated. First of all we consider the net profit as per P&L given, what is given, and for that profit and net profit we add all non-operating expenses. We'll add all non-operating expenses. We'll see what are the non-operating expenses given in this problem, and then we have to deduct, after adding we have to deduct non-operating incomes. So we will see what are the non-operating events which are incomes are given in this problem, and we will find out the funds from operation. So here this is the format. We have seen already the different formats. So different formats we have studied. From that we are taking here this is in the form of statement. So statement form we have prepared the statement and we are finding the funds from operation. So here first of all we are taking net profit for the year. It is given as 15 lakh. So I told you add net operating expenses. What are the net operating expenses given here? One is goodwill written off, that is 40,000 is given, we have taken here. Loss on sale of machinery, that is 10,000. Transfer to general reserve and depreciation provided on the machinery. So these are the non-operating expenses. So here we are having a goodwill written off rupees 40,000 and loss on sale of machinery rupees 10,000. Transfer to general reserve is 3 lakh and depreciation on machinery is 1,50,000. So totally we are having 5 lakh as non-operating expenses, and already we are having profit of rupees 15 lakh, and now we have to add these non-operating expenses of rupees 5 lakh to 15 lakh. The total will be 20 lakh. So now we got 20 lakh rupees. Now from this 20 lakh rupees we have to deduct operating incomes which are given in the problem. Here only one operating income is given, that is profit on sale of building. Only 75,000 rupees is a non-operating incomes. So we have to deduct non-operating incomes of rupees 75,000 from 20 lakh. So when we deduct 75,000 rupees from 20 lakh, automatically we get 19,25,000 as funds from operation. So this is very simple thing to calculate funds from operation. So here only the thing we have to keep in mind that first we have to know what is the net profit as per P&L account is given. We have to search for net profit which is given as per the profit and loss account. For that we have to add all non-operating expenses. So we know we have seen in the last sessions the many non-operating expenses like depreciation, then if there is any loss on sale of asset, then if there is any depreciation or transfer to general reserve, if any tax paid, dividend paid. So anything which we have paid that are non-operating expenses, such non-operating expenses are to be added to net profit which is given as per the P&L account. Then from that total we have to deduct non-operating incomes like dividend paid, dividend received, rent received, income tax refund, or any profit on sale of investment or profit on sale of fixed asset. Such things are to be deducted from the total of net profit and of non-operating expenses. Then finally we get the balance that we get is known as funds from operation. So like this, here from the given problem, this is for 5 marks. So here this is only the thing we have to calculate. So here this is very easiest method to calculate the funds from operations. So here finally we got 19,25,000 as funds from operation by deducting rupees 75,000, that is profit on sale of building, which is called as operating income, from the 20 lakh rupees total. So like this, from the given information we are going to calculate the funds from operation. So this is one problem. When we take a second problem, that is, this is for 15 marks problem. Following are the statement of assets and liabilities of the company as on 31/3/2016 and 17. So here I told you already. So if there is information regarding 2 years or 2 years balance sheet is given, there we have to calculate increase or changes in the working capital, whether there is any increase or decrease in the working capital. So here the following information is given. So here one company's information is given. Following are the statement of assets and liabilities of the company as on 31/3/2016 and 31/3/2017. 2 years information is given here. So here there are informations in particular column. Shareholders fund, that is share capital, in 2016 is 1,39,000 and in 2017 1,45,000, and reserves and surplus in 2016 21,800 and in 2017 24,120 rupees. So same way, non-current liabilities, that is long-term borrowings, that is debentures, note 3, it is rupees 24,000 and 12,000. Current liabilities, that is trade payable, that is creditor is given according to note 4. The creditor is for 2016 it is 20,000 and for 2017 23,680. So here when we total the all liabilities, we get 2,04,800 total liability for 2016 and 2,04,800 total for 2017 balance sheet. So now we will take assets. So here non-current assets means fixed assets, tangible fixed assets are given, that is land is given 40,000 and for 2017 it is 60,000. Intangible, that is goodwill, is given 20,000 and 10,000. So totally the non-current assets is 60,000 for 2016 and 70,000 for 2017. So current assets are given inventories as per note 7. So in 2016 there is 98,400 and in 2017 85,400 is given. Trade debtor is given as under the note 8, 28,400 for 2016 and 33,800 for 2017. Cash and cash equivalents under note 9, 18,000 for 2016 and 15,600 for 2017. So totally here we are getting 2,04,800 assets in 2016 and 2,04,800 in 2017. So here the vertical balance sheet is given. So under this the notes to account is given, in under which note what type of asset or liability is given, and detailed informations are given here. So as per note 1, the share capital, here under the share capital the shares are equity shares of rupees 10 each are given. So every share is with the face value of rupees 10. In 2016 it is 1,39,000 and it in 2017 1,45,000. As per note 2, reserves and surplus, so here share premium in 2016 is 1,000 and in 2017 is 3,000. Profit and loss account is given as 20,800 in 2016 and 21,120 as per 2017. So here we know in the balance sheet is given that reserves and surplus is the total reserves and surplus in 2016 is 21,800 and in 2017 24,120. So according to note 8, the trade receivables, that is debtors. So debtors in 2016 the total debtor is 29,800 and the total debtor in 2017 is 35,400. From this reserve for doubtful debts is also given. In 2016 there is a reserve for doubtful debts as 1,400 and in 2017 1,600. After deducting this RDD we get net debtors, and which is considered for the further calculations. So here the net debtors in 2016 is 28,400 and 33,800 in 2017. So here additional information is given. Some additional information is given here. So first, dividend were paid totaling rupees 7,000. So dividend were paid. So these are the dividend paid, means these are the non-operating expenses. Land was purchased for 20,000 and the amount provided for amortization of goodwill totaled rupees 10,000. Debenture loan was repaid at rupees 12,000. So here we have to you are required to prepare fund flow statement of changes in working capital. So here we are required to prepare fund flow statement and changes in working capital. So first step is we have to prepare schedule of changes in working capital. Here in theoretical aspect we have seen what do you mean by schedule of changes in working capital. Here we have to just compare the 2 years information and just we have to find out whether there is an increase or decrease in the particular asset or liability. Same way we will take one by one. In schedule of changes in working capital, the first in particular column, first we take current assets. Under that we have already studied that investment is taken, but in this problem investment is not given. Therefore we start from inventories. The stock value is given. In 2016 it is 98,400 and 2017 85,400, means the stock value was decreased in current year. So therefore there is a decrease of 13,000. So that decrease is to be recorded in decrease column. So like this, all assets and liabilities we have to find out whether there is increase or decrease is there. So next, trade receivables, under that debtor we have to take. So only current assets are taken here, not the fixed assets are considered, or intangible assets are not considered here. Only current assets we are taking here. Next one is debtor. So 2016 debtor is 28,400 and now it has become 2017 33,800. So therefore there is an increase, small increase in debtors, that is the amount of 5,400 is increased. So it is recorded in increase column. Next, cash and cash equivalent. Cash in hand was 18,000 and in 2017 it was 15,600, means there is an decrease of 2,400 in cash balance. So therefore when we total it, the total current assets is 14 lakh 1,44,800 in 2016 and 1,34,800 in 2017. And now we will take the current liabilities. So first we take current liabilities, that is trade payable, creditors. So creditor was 20,000 in 2016 and 23,680 in 2017, means there is a decrease in the value of current working capital, that is 3,680. So after this, now we have to calculate total liability. So total liability, current liability is only we have considered creditors. So therefore the total of current liability is 20,000 and 23,680. So now after getting the total current assets and current liabilities, now it is time to calculate the working capital. So working capital can be calculated by deducting total current liabilities from current assets. So we know in A the current assets are rupees 1,44,800 and now the total liability was 20,000, means we got a balance of rupees 1,24,800. Same way in 2017 there was 1,34,800 current assets and the current liability is 23,680. So the balance will be 1,11,120 rupees. So here in 2016 it was 1,24,800 and in 2017 1,11,120, means there is a shortage of rupees or decrease in the value of rupees 13,680. When we compare the values given in the balance sheet, according to the value of given in the balance sheet, the decrease value is 13,680. Same way when it comes to increase and decrease column, the increase column total is 5,400 and the decrease column total is 19,080, means there is an decrease value of rupees 13,680 rupees. So therefore like this the changes in working capital is calculated. So after calculating the changes in working capital, second step we have, there is no any sale or purchase of asset, therefore we are not preparing any there is purchase of asset is there and it is shown in fund flow statement. Before that we have to prepare the funds from operation. So here net profit as per the P&L account is given 21,120 of current year, and now the non-operating expenses are added. The non-operating expenses are given as dividend paid 7,000 and the amortization of goodwill, that is 10,000. The total non-operating expenses is 17,000 and we are getting total of rupees 38,120 after adding non-operating expenses to the net profit. So from the total of 38,120, now it is time to deduct non-operating incomes, and here non-operating incomes are not given, only the last year profit as per P&L account is given, that is 20,800. So whenever we deduct 20,800 from 38,120, we are getting rupees 17,320 as balance, and this balance is known as funds from operation. So like this we already know how to calculate the funds from operation, and we have seen in the last problem also and how the funds from operation is calculated by preparing the statement form. And here these two answers, that is the answers which got from the two statements, that is changes in the working capital and funds from operation, these two answers to be taken to recorded in fund flow statement to tally the account. So here now finally we are preparing the fund flow statement. So here the fund flow statement is prepared with the two columns, one is source column and application column. So here what are the sources, we will see. First, issue of shares. Here the difference between the 2 years issue of shares is 6,000. In 2016 the equity share capital is 1,45,000 and in 2017 was 1,39,000. So difference is 6,000. We have to compare and we have to take only the differences. Share premium, so 2,000, that is difference, and the funds from operation we have already calculated, that is 17,320 we are taking on source side, and there is a decrease in the working capital. So therefore, if there is any decrease in the working capital, that is to be recorded on the source side. So we have recorded 13,680 on source side, and application side there is a purchase of land 60,000 minus 40,000. So we are having only 20,000 as the balance, and the debenture loan was repaid at rupees 12,000. It is given in the additional information, and the dividends are paid at rupees 7,000. It is also given in the other information. And by taking all the informations here, we are preparing fund flow statement, and both the sides we got 39,000 as answer. So like this, the fund flow statement should be tallied. When it tallies, automatically it is a sign of a problem is right, and we can get 15 out of 15. So like this, we have to solve the problems, and first we have to understand the problem, and we have to just we have to prepare, or we have to plan what I have to prepare, what statements I have to prepare, and how that answer I have to get, and how to balance the fund flow statement. Like this we have to think, and we have to solve the problem. Thank you.